Hello, welcome back. I was looking yesterday at the trends, the market trends pretty much in our tool over here. And one of the stocks that were actually trending is ticker symbol MARA, which is Marathon Digital Holdings. And I also got a comment on YouTube from somebody who was suggesting that we take a look at this stock. And I thought it would be beneficial to make a video about it. Now, right now, it's actually not trending as much. It's still to be found here if you search. But yesterday it was trending by quite a lot. There were a lot more impressions. I guess it's, these things change depending on what is getting discussed during the day. But still, I wanted to take a look at this company, and so we are going to do that in this video. Now, what is Marathon Digital Holdings is the first thing that we're going to talk about. So let's see what this company is. And, after that, we're going to be examining its financials. So as you can see, I'm visiting the company profile page here, and Marathon Digital Holdings operates as a digital asset technology company that mines cryptocurrencies with a focus on the blockchain ecosystem. So it's basically a mining company. Now, I don't know how profitable that is, especially in 2022, but I guess we're going to examine that in the financials of the company. You have to be super careful about crypto. Is basically a field, a topic that I'm not very keen on. I think it has the potential to go down quite a lot, as much as it has the potential to go up quite a lot. But it's a speculative investment, so you have to be super careful. Now, you'll see this company has like 10 employees, like very a small company, and a very recent IPO actually. And we will take a look at its financials. How are they doing? Again, it's about mining here. And it seems like they had a short squeeze. I was taking a look at the stock news module here, which gives us a very nice overview of the news about the company. You will see why Marathon Digital stock is up more than 60%, short squeeze in progress. And if we take a look at these articles here, you will see that the shares of this company are having a stellar week. That was like a week ago pretty much. And they were up like a whopping 67%. Things of that sort are going to happen with these Bitcoin mining companies like Marathon Digital Holdings is. And the other one that was interesting over here is, let me fix that. Basically discussing a Marathon Digital short squeeze that is happening to be in progress right now. Pretty much the short interest for the company is about 17%. I was looking at a little bit earlier, and this is why it may have caused the short squeeze here last week, pretty much coming up. Now we're not going to be examining this article in detail, but we will be examining the financials in detail because this is what we care about. Generally speaking, I wouldn't think that this kind of company is a good company to actually invest in for the long term, but it may be a good company to trade. Now, regardless of that, because it was a request and because it was trending, I want to at least take a look at some of these, maybe this one, crypto mining companies, crypto-based companies. Maybe at some point I will also take a look at Coinbase again. Now, if we take a look at the 5 years here, you will see that during the crypto booming period, the stock were going higher, and right now it's basically plummeting. And it had a little bit of a short squeeze, it looks like, as you'll see here. Now, in terms of the metrics of the company, you are looking at the P ratio that is negative and a price to free cash flow ratio that is negative. And you don't like to see that, of course. Outstanding shares that the company has been issuing a ton of, as you can understand, since its IPO days. This alone basically tells you that the company is basically doesn't even care about investors. It's they are about pretty much issuing a ton of shares just to get the extra funding. Take a look at this since 2017. This has increased dramatically here, and just this value alone is basically a joke. I mean, you wouldn't be entering this company for a long-term trade. No way. If you're looking at something of that sort here, the company has been issuing shares like crazy, trying to sustain themselves, I'm assuming, because they are at a very massive slump right now. But even so, back in 2019, it looks like they were actually issuing the vast majority of their shares, maybe when the crypto market started going down, I suppose. Now, they have been growing their revenues, but in terms of net income and free cash flow, they have been doing horribly. And it's only the total equity that has been growing, understandably, because of the equity, because of the outstanding shares here, because of issuing too many shares. Now, The rest of the metrics here are pretty much return on equity that is negative, capital employed returns negative, net income margins negative. The company is not profitable, and this is a big issue, understandably. Now, if you take a look at the income statement, for example, of this company, you will see that they are just making a little bit of money and then pretty much increasing. They started from less revenue and then pretty much increasing their revenue tremendously here, which is, of course, nice to see. But let's also take a look at the net income, which is more important here, because you will see that even though we are having increased revenues, our net income is still negative, and it's actually the worst year. The year that had the highest revenue is actually the worst year in terms of net income. So it looks like the company hasn't grossed. Look at this gross profit here. So they're doing worse than the previous years, even though they have made a lot of revenue. Because revenue can be acquired in tons of different ways. But if you are not making money out of this revenue, then what's the point of this? So the next thing, the balance sheet. If we take a look at the balance sheet here, you will see that the total liabilities of the company are sitting at about 700 million. Again, this is a very small company, and the total equity of 600 million here, with quite some debt as well, sitting at about $700 million, as much as their total liabilities are, and actually more than the total equity here. An additional paid-in capital coming in from issuing shares. The company has been issuing shares like mad maniacs here, and this is why you're looking at so many millions being retrieved in terms of equity here. This is not a great picture to see, because obviously the company has been funding themselves through share issuance pretty much, and not their operations. And of course, this is a horrible thing for an investor. Again, you can see the net income being laid out here. It's in the negative every year, and if you actually convert it to net cash from operating activities, you will see that it is still in the negative. Capital expenditures is very high last year. Take a look at this one, 2021. Probably some new mining rigs or things of that sort, but insane amount of capital expenditure compared to what the company is making. Tons of costs here, and this is why the net cash from investing activities is very high. And in terms of financing activities, take a look at this one. The company has been getting some debt right now, as well as issuing stock. It's exactly what you don't want to see from a company. And pretty much the person who is buying this should only be using this this ticker symbol as a trading vehicle, not as a long-term investment. Everything so far has been proving us that this is not a company to hold for the long run, and you're basically betting, you're basically holding a lottery ticket, trying to make money out of this company here, in case the crypto market reverses and somehow we go back to the previous era. I think it's going to be unlikely, at least for a little while, to go back to this irrationality really in terms of the crypto market. Now, the free cash flow much in the negative, and last year, because of capital expenditures, very much into the negative. Terrible thing here. Now, let's take a look at our stock evaluation tool and try to see, is there any price to pay for this one? Doubtful, I should say, because take a look at this revenue growth, like all over the place. What are you even doing here? Yeah, these kinds of companies you really don't want to be messing with. The average is very high because of this value, as you can understand. But if you take a look at the breakdown, this is a very weird picture here. And what can you even do? Let's just do with something that is going to include various different revenue growth numbers here, even very high ones, like 30% for the next 5 years. Now, the net income margins, again, way over the place. I mean, again, what can you really do with this one? The last couple of years has been negative. Yet I'm still going to go with something much higher here, just for the sake of the argument. Let's just go with 20, 25 and 30. You're noticing that I'm being super aggressive here. I wouldn't normally do that, but this company is more than likely already not a buy, nowhere near a buy really, but again, mostly a trading symbol. Still, I just wanted to examine, since we're taking a look at the stock evaluation tool here, just examine some potential scenarios here. The free cash flow margin, again, is going to be a little bit all over the place. We're going to go with something that is very normal, 90, 100, and 110, and then 30% in terms of annual return is the typical thing. Of course, for this kind of company, you would want much more. I would say maybe 15%. But even these numbers, I'm assuming that they're not going to give us a very nice valuation here. Yeah, as you would expect, we're in the red for our low and medium estimates, and it's only our high ones for which we're in the green. But remember, our estimates here are very aggressive based on what the company has been doing, because again, the company has been basically losing money. And so right now we have examined some scenarios in which the company is making money, and not even marginally, they're making good money here. And so this kind of scenario is probably not going to play out. What I think is a more valid scenario potentially is maybe something like -10 here, and 0 and let's just say 10 would probably make more sense. Now the revenue growth could be achieved 10, 20 and 30%. It's possible, very, very possible. But if we try these numbers, this is going to be horrible, as you can understand. With a minus 10% net income margin, the company losing money, of course you can understand that there's no money to pay for this one. And even the medium ones, the company doesn't really make money when that happens, even though they're growing their revenue. They're not making any money. It's only our high one with a 30% revenue growth and a 10% net income margin. That actually does make some sense, but it's still expensive. So for this kind of company, there is basically no price to pay right now. It's a bet. It's a ticket. It's a lottery ticket that could go well or couldn't go well, depending on what happens with the rest of the crypto market. But right now, in this current economic situation that we are within, I mean, the worldwide markets are tumbling. It's probably not a good idea to be holding these kinds of companies, and it's only a potential, a good hold for a little while, maybe a daily hold or a weekly hold or something of that sort. If you are a trader and if you know what you're doing there, maybe you can make some money. But otherwise, I would definitely avoid this one for a long-term investment. This is just not a company to long-term invest in. But thank you for watching. I hope you enjoyed the video. Remember to leave a like and subscribe, and I'll see you in the very next one, guys. In the meantime, take a look at the video that I made earlier, and in this one I'm talking about Meta, a company that is a much, much better investment than this one. Thanks again, and I'll see you soon. Bye-bye.